Welcome everybody to another weekly market update. It's December the 11th and we're looking at this after the market closed on December the 8th. Just about another half hour till open, so let's just check in, but there's nothing really that new to report. Here's the weekly chart of the S&P 500. Just a quick pause, as I always say each week. Why do we do this? Well, because the stock market is important. It affects everything. It's where your pension is. It gives you an early warning sign about the economy. There's the knock-on effect for anything happens in the stock market is typically 6 to 9 months down the road. So the S&P 500 is like the benchmark for planet Earth, and then this is week-to-week action here over the last few years. If you see most of 2017, and this blue line here is kind of smooths things out for us, kind of gives us like a rolling average. So the healthy picture is right now, because the stock market is well and truly above its moving average, and the moving average is pointing vigorously upwards, and has been doing for over a year now. And since when my system that I teach got you in right exactly then, and hasn't got you out since. And here it's kind of stayed. I've drawn these blue lines here as it's bouncing within this upwards trending channel. What's interesting about the last couple of weeks we see here is that it actually popped above its channel, which is usually a little bit of a, it should correct from that sort of situation. It kind of gets ahead of itself, and that's still probably likely. But I think what's kept it up there to the last week as well, as I mentioned last week, I saw it last week, but I didn't say anything about it because we're in that Christmas kind of mindset, which is, as I've been saying, November and December just usually, very bullish months, and then the January hangover might be another story, and there it is. So we're well and truly in a bull market, and have been for some time. So let's look at the daily chart now, see if we can get any more clues about what's going on. This is just day to day now, and there's that 200 day with a 40-week moving average there. Kind of, you can see where it is. We had a little bit of a wobble actually towards the middle of last week, and that's what these red bars here. But look what happened with the volume. It's actually, as this selling was going on, volume was dropping, which is a kind of, that's a bullish sign, as it wasn't a concerted sell-off. Although some of these areas were definitely a little bit cause for concern, but as I say, volume drops, and there it is. And then lo and behold, we finished the week up on another all-time high, I believe. It looks like 2651. So on it goes. The short term is upwards. I've got no reason to say otherwise, and that's all for this week, and I will speak to you next time. Don't forget my the seminar on January the 13th and the 14th in London. Details are going to be coming to you very soon, but there's a special deal for members, and you'll be I think you'll like the price for and you can come for as much of it, as little of it as you want. But I have got some very important things to update you with this year, and that's why I'm having it early actually in January. I'm going to talk about cryptocurrencies, how to trade them and so on, how to make money from them in all kinds of different ways. And we're going to talk about what is different about the next 20 years. Very, very important. It's going to change a lot of the trading rules over the next, say, 15 to 20 years. And it's really happening right now, and you need to be aware of it, as well as looking at some cool new trading systems. So I hope to see you on January 13th. Invitations coming out anytime, but feel free to email me if you'd like me to get your reservation, get you a place early. Speak to you next week.